You know, Midas, let's talk about how to control your emotions when stocks are crashing. I always get this question on my YouTube comments, on my Discord comments, on Instagram. People are asking me, is the stock market crashing after a 10% drop in like Bitcoin or any of these volatile stocks that I talk about? And they're always like, should I sell right now? But when you ask those questions, sometimes I just chuckle a bit because it's just called the definition is basically panic selling, where just because the stock go down a bit, you're panicking, your worry's gonna go down more, so you lock in your losses, and that's how you lose money in the stock market. That's how a lot of people that are investing and traders just lose money. They think stocks when they go down forever. And especially with these volatile stocks I'm talking about. When stocks go down, if you believe in it, you've done the research, you had the conviction, they will likely go back up. So you should be selling not for like a 10% dip. No, sell it for 100% upside. When did I ever recommend stocks that have gone down 10%? But anyways, my whole content, everything about this channel is all not financial advice. So, do your own research. But this is why you should listen to Midas. Will I beat the S&P 500 by 103x in less than a year? If you want the proof, you can check it on my link in bio. So, this is how you control your emotions when stocks are crashing or where the market is going down. So first of all, there should be no emotions whatsoever when you're investing or when you're trading. And this is the main reason why if you have emotions, you're gonna lose 100%. It's just being like, with dating, always being nonchalant, always trying to, not lose your cool. Same idea with investing, same idea with trading. Stocks can go down 40% and you should be calm as a bird. Calm, relaxed, and cool. Because if you did the research, that stock is definitely going to go back up in the future. And you believe in it and you see the catalyst, it's going to go back up. So don't panic. Don't be a beginner. Do not panic. Panic sell is just the worst move you can do in stock and investing. You should embrace volatility, especially when you are investing. Nothing goes up forever, just like nothing goes down forever. So keep that in mind when stocks go down. And emotional control is equal to one of the biggest edges most of these investors and traders can do. That's you see a lot of traders when they are down lots of money, they revenge trade and they lose even more money because it's a repeating cycle, right? Their whole brain is all emotional. So they're like, I lost $2,000. Let's try to make it back up. So maybe they get $1,000 and then they lose $500. Now they're 2.5K under debt. They put more money in and then they end the day off with $5,000, out of their pocket. It's because they don't control their emotions, which is very crucial when investing and with trading. That's why a lot of people lose, a lot of beginners lose in the markets. So you really only have three rational choices when it comes to the market being down or a market crash. And I'll get to that very, very soon. But remember that volatility is the price of asymmetric upside. If you are a follower of this channel, you've probably heard of me talk about asymmetric investing and how I always pick stocks but they have a 10x upside, or else I just don't even bother talking about it. Yeah, like for reference, I called Oklo, Nebius Group, RGTI, QBTS, all of these speculative technologies that have ran up over 1,000% in the last year. And that's no, you can't get those gains if you invest in the S&P or index funds. Like those stocks are less volatile for a reason. They are for beginners that can't think, that don't know how to do research and don't know how to play the stock market to its truest potential. So that's what I mean by asymmetric upside and how I'm able to bet on these 10x plays. So remember that big upside requires big swings. That means it can go up 100%, but it could also go down 50% in like a couple of days. So because 10x stocks always crash harder. I'm not talking about meme stocks, I'm talking about penny stocks or these, like even Nebius Group or CoreWeave. These stocks did very poorly at first, but then they shot up. Even Oklo did. It went from like $20 down to $10 all the way up to $170. So you had to hold it up. Palantir, for another example, Nvidia, all these different companies, they embrace volatility, and the holders that held through all the volatility became millionaires. just by holding these 10x companies. And asymmetric investing is equal to uneven outcomes. So this should be a graph, but the whole saying of asymmetric investing is minimal downside and infinite upside. That is what I mean by asymmetric investing. You want to find companies that have that minimal downside but have an increasing amount of upside. Those are the companies you want to bet on, not index funds, not meme stocks, not stocks that are just not going to be there in the next few years. You want to bet stocks that have asymmetric asymmetry. But let's talk about why stocks fall, even the good ones, like Iron, Cypher, what's another name? Like Nvidia, Palantir, all these good stocks, they all fell down from the peaks. Like Nvidia used to be $100 stock. Palantir used to be like a $20 stock, crashing down to like half the price in just like 1 year. But if you held on to those stocks, they would have rocketed in the year. So there's a lot of ways you can understand why stocks fall. Well, first we got liquidity drains. If QT begins again and QE ends, then not much liquidity in the markets. You are going to be like, less risk on, more risk adverse. So therefore, they're going to spend less money into these risky assets. Macro shocks, Bitcoin falling down 20%. People are going to definitely exit out because they'll be afraid that that's going to be a bear market. And I want to say though that even though these stocks, like I'm telling you this knowledge that stocks will fall, if you're an investor, this information should not really matter to you. This should be enticing you to buy more into the dips. Because especially if you're an investor, it's going to be very hard for you to time the bottom. Stocks you think could go down and go down more. And if you panic sold, it can go down a bit more. And you're like, I'm glad it did. Then you keep, not trying to buy the stock. So it goes to 20%. But then after some news, that stock can rocket up 440% in like a day. So if you held, you would have been back in profit. And if you just, dollar cost average, you would have been even more in profit. So yeah, always as an investor, don't try to time the markets. Even though stocks will fall, just consider it just a natural part of investing and the stock markets. Just buy into those dips. Profit taking, a lot of these hedge funds, market makers always want to, sell near the top, bleed out, the bears or bleed out the bulls, and especially the beginners. People are just gonna be putting money to the stock market, losing the money because they don't know how to held the right stocks, and that's what happens. We also have short and algorithms from hedge funds. They're definitely going to manipulate the market. It is what it is. I've been in the market for so many years. I understand it. I know when things are just completely manipulated or when they're not completely manipulated. So keep that in mind. There's a lot of manipulation, especially with these big players that deal with like millions or $1 billion in investments. And even though the price goes down 50%, if nothing about the company fundamentally changed, like they're not bankrupt, they are still in business, they still have their drones, they still have their technology, and they're not bankrupt, you should just ignore the price, honestly. And I say this because, for a good example, is Suichi. A lot of people thought that when the stock crashed down $4 down to a dollar, they were like, this stock is so shit. This stock is like, why did I buy this stock? But if they really looked into the potential or the thesis of Suigi and what I posted on Twitter, they would really understand why the team, and why the stock had asymmetry, and why even though it went down 40%, it could easily rocket back up 100%. And now a lot of these guys that panic sold are gonna find out why that is. So another concept is to stay convicted if your thesis is intact. If nothing changed about the company, nothing fundamentally, the company is still alive, the company is still, still thriving despite the price action of the stock, then just hold. You need conviction if you want to hold on to these 10x plays because many of these market makers will shake you out, and it happened with Palantir and it happened with Nvidia. So if you want to stay convicted, what you can do is look back at your thesis or look back at what made you buy into the company and ask, did the fundamentals of the company break? If it did not, then hold. If it did drastically, then maybe you want to reconsider selling up to the upside if it rebounds. If not, just stay calm, relax, either buy into the dips if you have no money, then hold. That's all you can do in those scenarios. And remember that long-term thinking beats emotion. I even preach this in real life too. But a lot of people want this, quick way to make money, especially with trading. They're always like, if I trade every single day, I'm eventually going to get a Lambo or make $1 million a year. But really, that's not the case. It's people lose in the stock market or lose in trading because they let the emotions dictate. They want everything for free. They want everything. They don't want to work for anything. And they just expect money given to them. That doesn't work. Life is not like that. Always have the long-term mindset that you're going to grind right now. So long term, you can enjoy the fruits of your labor. So back to my point of you only have three rational choices, featuring my basketball goats to the very left corner. So the first one is you can either panic sell and not look back. Probably the worst rational, I don't think it's an irrational, probably irrational choice, honestly, but it's probably the worst choice on this list. Panic sell is the reason why people lose money in the stock market. It's why beginners don't make money. There's a saying called scare money doesn't make money, and it's true. I believe the people that the most richest and the most wealthy, they took a huge risk to get where they're at. Like think of Elon Musk. Even though he was born into a family, he risked a lot of his wealth to build SpaceX, to build what's the other company? And even Tesla, whatever, all those other companies that he's built. It all took a risk for him to get there. So keep that in mind. Same idea with stocks. Number two is to hold, chill, and just zoom out. Probably the best thing you can do, especially if no cash, if you just went all in and the stock did more, just hold. Just hold is all you can do really. Because that's what's the point? Let's say if you have no money, if you really need the money, then maybe you should sell. But if you don't need the money right now and you're just like, what should I do with it? Should I just sell it more or sell it now so that when it goes lower, I can buy it back? Sure, in hindsight, that makes so much sense. Like, go ahead. The stock dipped 20%, it'll dip another 20%. So why don't you just, sell it for a 20% loss and then buy it back for 40% loss? But that is what you call timing the market, which is impossible. And I guarantee you it's impossible because I have failed so many times at it. I thought that stocks would go down lower, but it never did, and it went even higher. So I had to FOMO in. But then I learned by all of these different lessons that you really just hold. Honestly, just hold. And that brings me to our last point of buying more if you have conviction and you have the cash. Because dips, especially red days, should be making you ecstatic. It should make you excited to buy into these 10x stocks. Because you know that if you buy into it and it's going to increase in the future, you have lowered your average and therefore you're going to make a lot more profits just by buying into those dips. And everything else, any news headlines, if you believe in your stock, is all just emotional noise. Ignore it and just disregard it. You're going to lose money by following the noise, by following the news. And I want you guys to have that asymmetric investing mindset. I'm going to preach this to you guys right now very shortly, but I'm also going to make a long video about this whole asymmetric investing. But the whole concept of this investing strategy that I created is you want to invest in stocks that have minimal downside, like limited loss. However, it has an unlimited potential. You want it to just skyrocket. Because this means that you're able to bet on stocks that have a small downside, but a massive upside. And I'm sure if you're watching the channel, you want to become financially free. You want to escape the 9 to 5 rat race. You want to escape the matrix. And this is the best mindset to do it. And remember, just accept it. Volatile assets behave violently. They don't go up linearly. Quite impossible for it to go linearly. No, it's not going to happen. It's going to, crash down. It's going to go even higher. It's going to crash down even more, and it's going to go insanely up. That's how it works. So expect sharp pullback, especially with these penny stocks, these stocks that you're betting on. Palantir was one stock that was quite volatile. Now it's like not that volatile, I'd say. And winners are built through just holding periods, through consolidation periods. When you're just buying, when no one's talking about it, when no one really cares about the stock, that is when you print money. That is when you actually win in the stock markets. Because think about it. Let's say you bought Palantir at $100 or $150, right? When everyone's talking about it, oh, it's going to go $300. Well, is it at $300 right now? No, it's not. Because people, when they bought Palantir, they probably bought it at $20 like an asymmetric investor would and held it to $150. So they're not worried about the price action and they're willing to take profits whenever they want to. Another concept is to not confuse volatility with risk. Volatility is not equate to risk. So volatility is temporary loss, while risk is a permanent loss. So price is not equal to value. Temporary pain is not the same as permanent loss. A lot of people on my Discord are always complaining, oh my God, I'm down 10%. Should I sell now? Or, oh my God, Midas, I'm down 10%. I'm losing money right now. I'm down like $30,000. Like, I'm gonna tell it to you guys straight. I'm probably down a lot more money than you guys. And even then, being down $10,000, you're not down until you actually sell. That's a paper loss. You just invest into a stock and it went down because of either bad macro, bad narratives, or whatever, and it just went down. That's why you lose in the stock markets because you think that being down in the stock, down 10%, is a permanent loss. It's only a loss if you really sell. So accept volatility. Volatility is completely normal, especially with these 10x stocks. And emotional trades create real losses. So don't let that be you. I've seen too many people lose in trading, losing in investing because of these real losses. And here's some techniques to stay calm. This help you guys improve your mental health and improve your stock and investing game. First of all, stop checking charts every 5 minutes, every day, every time in the morning. It's just gonna make you like pretty annoyed. You're gonna want to blame people. You're going to want to, punch something. You're just going to want to get pretty angry at your portfolio. And trust me, I had those days, but just I realized that if every single stock is down, I don't really care because frankly, we're all down together, and it's okay. I know the market's gonna rebound, but if my stock is going down 90% and it's only my stock, then I will panic. And use alerts instead of staring at candles. Watching the price movement of a stock going up and down is just going to be quite annoying for you. And always keep a trading journal. This is key for traders. Understanding where you went wrong, understanding what you did well in the markets will help you become a better trader, become a better investor, and use long-term time frames to understand trends and understand where you're going. And first of all, you need a plan. When you're investing, when you're trading, you need to go into something knowing why you bought, knowing why you'll sell, knowing your time horizon, and having those systems to reduce those emotional mistakes because you will have emotional mistakes, and it's much better to understand them and predict them before they happen so you lock in your plan and your idea and you'll deviate off of it. Like there's a lot of guys in trading too. They set stop losses, they don't respect it, or they think the stock's gonna go higher, so they keep holding on to the stock and they never sell. Then the stock drops and they're like, holy shit, I lost much money. And if I just stuck to my plan, I would have made back the money or even just stuck to it. Like, don't just let your emotions dictate you. Stick with the plan and go by it. And this is the truth about 10x stocks that no one is going to tell you. But they always dip 30 to 7% on the way up, high upside, and then you have the high upside of 200%. But there's always going to be a dip because market manipulators, people are just going to bash the stock on X or Reddit, and you have to stay convicted. Retail noise, ignore them. And early stage companies swing wildly. Keep that in mind. It happens with Palantir, it happened with Nvidia. So just keep that in mind. Doesn't mean it's a bad company. And strong hands capture asymmetric gains, while the paper hands or the panic sellers will always lose money. Like I mentioned, if you can't handle volatility, you can't handle downturns, don't watch the channel because you're not ready for my picks and you're not ready for financial freedom in the stock markets. And remember the weak hand fund strong hands. Be the strong hands. Don't be the panic sellers of the weak hands. But yeah, if you've got any questions about this whole strategy and how I'm able to keep my cool, give me a comment below and respond when I can. And if you want more alpha, join my free Discord for more alpha, link in bio. And subscribe and like for more videos. But that's all I got for today. I'll catch you guys in the next video. Peace.